HBO debuts the Game of Thrones franchise extension, and Amazon bets on their version of Lord of the Rings. But is the money going to bring in eyeballs? Julia Borston has more on the continuing streaming wars. Julia?
Well, John, we don't know about the eyeballs yet because we are awaiting ratings on House of the Dragon, which debuted last night on HBO and HBO Max. This is part of a high-stakes attempt to extend HBO, the streamer's most valuable franchise, Game of Thrones, with a prequel. And it comes after the final season of Game of Thrones fell flat with fans. It had a reported $15 to $20 million an episode. This series comes at a time when HBO Max and the other streamers are fighting to draw and retain consumers who are expected to be cutting costs and perhaps cutting back on the number of services they pay for. Now, Warner Brothers Discovery shares are down about 43% year to date, and CEO David Zaslav has said he's looking for billions in additional cost savings. This new show is going up against Amazon's biggest content bet yet. In just a week and a half, Amazon Prime is launching The Rings of Power. This is set before The Hobbit and Lord of the Rings. The 5 seasons that are in the works are expected to cost over $1 billion, making it the most expensive TV series ever made by far. And it's part of Amazon's strategy, along with the rights to NFL Thursday night games, to use big brands to draw and retain those Amazon Prime subscribers. So unlike Netflix, whose shares are down today on a downgrade, both HBO Max and Amazon are releasing their new episodes one at a time, once a week, as Netflix's rivals move away from that binge model, which isn't working as well as it used to, John.
One a week. That's kind of like old TV.
Old school.
Yeah, old school. Julia, thanks. Beth, you were just talking about quality in stocks. And does that apply to media and streamers, too? And what does quality mean anymore, if it does?
Sure. I think media has really been beat up in the market, and I would keep a keen eye for that quality. Amazon obviously has a different motivation than some of the other media companies. Theirs is to cross-sell, keep you as a Prime customer. HBO and Netflix, probably more apples to apples. On that note, with Netflix being down so much, we do not own Netflix at this time, but we're certainly watching it. This is a company that is always in the top 10 for quality, highest watched shows. And with its recent move into ad video on demand, if you can take a global juggernaut, mix it with 60% off its highs, and add a massive catalyst, as a tech investor, I tend to pay attention. So I would say that Netflix, when you talk about quality, could become an interesting stock, especially for early 2023.